Well, I know a lot of people have graduated school, but just because they've graduated college does not mean they are done with college. There are a ton of student loans out there that people are trying to pay off, and sometimes people just don't even pay them off. We have joining us Michael Blattman, who is a professor at the University of Maryland, and you have some, maybe, hopefully, some suggestions on how people can get at least some of these debts under control, because I feel right now like they're sort of out of control.
Yes, they are. Basically, there are options for debt relief. So one of the major way is consolidation. In other words, taking your current loans, if you have 5 or 6 loans, and you could roll it up into one loan at a lower interest rate to get a lower monthly payment. It doesn't get rid of the debt, but it certainly makes your month-to-month payments more manageable.
Right. So, in other words, you're paying one maybe larger bill each month instead of having to spread all these out.
Correct, because if you have different loans, usually you're paying the max to each lender.
Right.
So together it's a huge payment, but the max payment to one lender is usually a lot more manageable.
Now, I was saying, before you joined us, how the student loan debt, it's really become a huge problem for many people. And, we have the millennials now. How is it impacting them? Because obviously many of them borrowed money for college.
Yeah, most people are getting out of undergraduate have an average of $37,000 worth of debt. If you go into grad school or medical school or whatever, you could have hundreds of thousands of dollars of debt. So how is it impacting the millennials? Is usually it's been shown that approximately 40% of millennials are putting off life events. In other words, they're putting off getting married, they're putting off having children, they're putting off getting a house. And usually these life events are, if you took an analysis, is usually put off as much as 7 years down the road because you do get paying off. Yeah, it is kind of crazy. And so you want to get on with your life, and this is like a boulder sitting on your shoulders.
Oh, for sure. Oh, gosh, it's like a 1,000,000-pound boulder sitting on your shoulders. I wanted to ask you, too, because here we have, the presidential election coming up, and so much has been said throughout, the campaign, which isn't even over yet.
Right.
But one thing that both presidential candidates have been discussing are their plans for student loan refinancing and even some forgiveness. What could these plans mean for student borrowers?
It could mean a lot depending upon if they are enacted, who's elected, and so on. For instance, from the Democratic point of view side, they have gone on record of saying that if your family owes or makes $125,000 or less, then they would like in-state tuition to be free, starting in, somewhere down the road around, 2021, I believe, is the year that it would kick in for free.
Right.
They would like to have student loan debt to be forgiven after 20 years. If you haven't paid off, okay, end of story. You're gone. You're done. They would like to cut interest rates, which makes a lot of sense because currently the federal loans average somewhere around 6.99%. And these are 10-year loans. Now, when the government is issuing 10-year debt, meaning selling Treasury notes, and they are for approximately 1.48%, there's a big profit in there. So basically, getting it down to something that's more marketable will obviously reduce the rates substantially.
Right. Now, I want to backtrack here for a second because you were talking about loan forgiveness. If that were really to happen and the loan was forgiven, would it somewhere down the line come back to bite you in terms of your credit?
Well, let's put it this way. Let's say you had $100,000 worth of debt and you paid off $80,000 of that over the next 20 years, and the last $20,000 is forgiven. Now, you don't have to pay that, but there's another agency in the government called the IRS that looks at that as a $20,000 income, so you're going to have to pay tax on that, and it will have to be a one-time payment. It's not spread out over the years, so you're going to have to pay one-time payment. So if you're in the highest tax bracket in 20 years because you're good at your job and your career, well, you tack on another $20,000 at the highest tax rate, so you're going to be paying a substantial amount.
So you still, I mean, even though something may be forgiven, you still are going to be paying somewhere down the line.
There's no free lunch. There's no free lunch in anything. So, yeah, there is a cost. Yes.
I know that there are so many more questions I have that I know our listeners would like to know, too, because there's so many people out there with these debts, but we're running out of time. Mm-hmm. Is there a place where our listeners can go to maybe get some more information from you?
Yeah, there's several places you can go to. Well, like one company that I'm consulting with is called Refinally, and I know that they have what's called Refinally U as a university that will explain everything that you need to know about the student loan debt and your options and so on and so forth.
Okay.
And that would be, refinally.com. So that would be one resource. Otherwise, just Google around and Department of Education and so on, and then you'll get answers to whatever you need.
Well, Michael Blattman, thank you very, very much for taking time to speak with us today. It's been helpful.
I thank you for having me on.